All right, we are recording. I am so thankful and grateful that Cindy has agreed to come on here and share her knowledge about taxes in your small business. So I am just going to turn it over to Cindy. I'm going to mute out, and if people could keep questions to the chat, and then maybe we can cover questions after she's, given us her information. Take it away, babe.
Thank you. For those who don't know me, I'm Cindy. I'm here in New York, even though the background is San Francisco. I've been doing taxes for over 10 years. I used to work at the IRS. I do audits for, audit defense and all sorts of things to help people get out of IRS debt for individuals and businesses, tax planning and all those things. I could talk about this stuff for well over the time allotted here. So if you don't get questions answered, that's okay, because email me or message me and I can answer them. I'll try and be super generic here because every single person on here has a different situation, and there's no way that this general advice will apply to everybody, because just little tweaks, you could all make the exact same amount of money every year. You all have a different situation and a different end result. First thing, we'll start with good news. Tax filing deadline has moved officially. It is now no longer April 15th, it is July 15th. That's both for individuals and businesses. July 15th. Obviously, if you think you're gonna get a refund, file sooner, you get your money. If you owe money, you don't have to pay until July 15th as well. That's both for individuals and businesses. Businesses or corporate returns, they mean big dollar, $10 million plus accounts. But individuals, everybody should fall within there. Don't owe any money till July 15th with no penalties and no interest. The basics, and I know some of you guys have messaged me previously, how do you keep good books and records? How do you track everything? And the best advice for tax purposes I can give is be conservative and use common sense. It's easier said than done, and I see a lot of people that make lots of money who make really dumb mistakes and get audited and pay hundreds of thousands of dollars. For most everybody here who's above the $4,000 promoter level, you can use something someone like Jennifer and Bill, or probably Debbie, or several other people who are in a much higher bracket. Their situation is going to be a little bit different, just because they have other, Jennifer has brick and mortar business in addition to her LeVel business. Her situation is different in how she will do things, as opposed to those of you who are in that $4,000 to $80,000 or $200,000 range. QuickBooks is a great program. Regular businesses use it. It's easy to use. There's apps for your phone. Basic things like meals. If we were all right now, we're out for a meal, when you go to the Palooza in May or June or whenever they end up moving it to, you all go out to a meal, you're discussing business, save your receipt. Whoever pays, you can deduct 50% of your meal expenses. A common deduction, meal versus entertainment. You guys go out, you do tickets to a game, a sporting event or something. You can't deduct the tickets to the sporting event anymore. Only 50% of, so if you got to a baseball game and then you got food, you can deduct the food expense, not the baseball tickets expense. In terms of the actual business, when you buy your own products, technically those are, and again, I do everything really conservative just because I see it from an audit standpoint and what's going to get you audited. Your own product, no, but the products you're buying to use as samples, that's deductible as a business expense. And you could put it, when you itemize your deductions, you could put it under marketing. There's marketing, mailing, postage, that sort of an expense on there. There's promotions, supplies. So anytime you buy, you're at Target and you get like the mailing envelopes and the tape and the fancy tissue paper and all that to mail out to, you know, people who want samples. That's mailing expenses or supplies. For your vehicle, for those of you that have vehicle expenses, keep in mind you can do one or the other. You can't do both. You can either do the standard mileage deduction or you can do the vehicle expenses. Vehicle expenses are things like tires, oil change, the 30,000 mile service on your car, brakes. I personally, what I would recommend to do is keep track of both, keep track of your mileage and your expenses, and see which one at the end of the year works out to your advantage. And let's see, who's got it? Can our products be deducted as a wellness kind, like our health insurance prescriptions? Personally, I would be hesitant to do it because it's not, supplements aren't necessarily a medical expense unless you have a doctor's note for them. Like, I mean, I've seen doctors write you a note for like, oh, you need a hot tub because you have a bad back. I've seen people write off their hot tubs because they have a doctor's note for it. I would be hesitant to do that because, I mean, and 90% of people who do write it off are not going to be audited on it. I would take a more conservative approach and say, unless you can back it up in an audit, don't do it because it's not worth the hassle. How much do we, I'm sorry, I'm trying to read these as well. How much do we determine how much we purchase is for personal use versus trials and for business if it's all under the same account when buying in bulk? I would say that what you buy for personal use is just that. You know that you use a box of capsules a month, probably 1 to 2 boxes of shakes. You might use 1 to 2 boxes of Boost. Like what an average person uses versus, are you just buying everything to buy it? And even if you don't routinely look at, or use every single product in the line. And again, I take a more conservative approach. There are other, accountants, bookkeepers, and those people out there that'll say, oh, write it all off. I personally would be hesitant to do that, especially now with a lot of gig economy type businesses like the Ubers and the Lyfts and all of these other things. Most of the big tax court cases that come up, they come up because of companies, and they're documented. Amway, Avon, Mary Kay, Tupperware were some of the biggest tax court cases about what's a hobby business versus what's an actual business where your goal at the end of the day is to eventually make money. So again, a famous Amway case is, the guy spent, hundreds of thousands, tens of thousands of dollars over the course of the year saying, oh, I'm doing Amway for a business. He would write off all of these expenses, but he only had 2 real customers, his grandmother and somebody else. He lost and tried to, in court trying to write off a bunch of expenses, which if he was actually generating income, like most everybody here does, wouldn't have been an issue. But they said, no, this is a hobby. It's not a real business. Therefore, you're responsible for things. Home office expenses. Home office is always a tricky one. Home office is a dedicated room in your home that is used for nothing else. So that's your spare bedroom. That is your closet. That's a dedicated area. It's not the sofa in your living room. It is not your kitchen table. For myself, I generally never write off the actual home office expense. It's too easy to be audited without that dedicated room. probably for someone, and I'll just pick on Jennifer, for someone like Jennifer, she has a large home. She probably has a spare room that she and Bill use as a dedicated office. That's easy, because for something like that, what you would do is say your home's 5,000 square feet. That room is, 200 square feet, which is, because I'm crap at math right now, 10% of your home's, space. So that means that your electric, your gas, your water, your sewer, your trash, 10% of those bills can be written off as a home office expense, which also comes to cell phone usage and internet usage. Obviously, we're all on our phones, we're all on our internet every single day. How much is home and how much is business? It's harder now to distinguish that because a lot of us have like the all-inclusive plans, unlimited minutes, unlimited internet, unlimited, web access on our phones. You kind of have to estimate it because there's no real way to determine it. If you say 100% of your cell phone bill, mine's $85 a month. I know for a fact 100% of my bill is not for business only. I text my mom, I call my friend, I message everybody on the, Facebook that are friends that aren't customers. You can't write off 100% of your personal phone. I know some of you also have like a personal phone and a work phone. Yeah, if you have two separate phones, you can write off one 100% as a work phone if you only use it for work things. But I mean, even doing legal work and stuff that I do on the side outside my regular job, the most I've ever deducted for my cell phone bill is about 20% of the bill. But 20% times 12 still works out to be about $300 or $400 over the course of a year. Same with your internet. How much internet, if you've got kids at home and everything, 100% of your internet is not for your business because you're watching the Disney Channel and the Netflix and doing all these things. You're not exclusively using the internet for your business. So again, a reasonable portion of that, 20%, I personally, if I'm at home working, wouldn't do more than 50% of my internet costs being deductible. The big one though, that we haven't talked about, self-employment taxes. Every time you guys get a commission check on Tuesdays from LeVel, whether that's your auto bonus, whether that's your regular commission, it's taxable. And because you're self-employed, you pay kind of double. You can do it a variety of ways. For some people, it's easier to do it on a quarterly basis. Other people do it on a monthly. Because you're paid weekly, my personal recommendation would be pay the IRS weekly. The reason for that is because then you don't accidentally spend the money. Because if you pay a little bit over time, by the end of the year, you should really have a very, very small, if not no tax bill once you factor in all of your expenses. If you wait quarterly, things come up in life, sales happen, kids have activities and events, you have to get the car fixed on the fly, all sorts of things like that. It's easier to pay as you go along. You can pay the IRS online on their website. For those of you who live in states that also have state income tax, don't forget to pay the state as well. On $1,000 check, my recommendation, 10% to the, 15% to the feds, a minimum of 10% to the state. People always forget about the state. Being here in New York and New Jersey, they are vicious about collecting their state income tax. So is California. They're almost worse than the IRS. So don't forget to, when you're making your estimated state tax payments, pay the state as well. Most all states now have an online portal with their Department of Treasury that you can go online to do that. With the IRS, it's free. If you pay out of like direct debit out of your checking account versus using like a debit or a credit card, the government charges you back that like 3% fee. It's easier to do it as you go along rather than wait on a quarterly basis to do it. Also, if you miss too many quarterly payments, they can send you a letter to say that, we're gonna have to have a conversation with you about making estimated tax. That's one reason why self-employed people end up owing more than any reason, is they don't make their quarterly tax payments. And there's a huge amount of penalties and interest involved in that. There's also a huge problem with not only collection on it from the IRS standpoint, but it's an area where they're not too willing to negotiate balances and waive, fees like, I've got a client now who has $2.8 million for not paying his estimates. Let's see. Yeah, our accountant lets us write off, about 90% of product for samples that we send out. Yeah, I mean, and for those of you that have that volume, right, and that's a large portion of your business is sending samples out. Yeah, the samples, not a problem to write that off as a business expense because that's marketing. It's promotion or advertising, depending on how your accountant does it. Yeah, whatever line they put that on, that makes sense. But make sure you differentiate between like what's reasonable for you to use on a daily basis as your personal versus, all the extra product you buy to send out as samples for, marketing or advertising purposes. I think it's a lot easier now too for some of the other products like the skincare line that, things are coming in the small sample packs rather than like a big bottle that you have to portion out. Like, you can provide an invoice if you were ever questioned, say, look, I bought 3 of these, sample boxes. I portioned these out to, send out as samples. That's what that expense was. Oh, that makes sense, as opposed to a big bottle that arguably you could use for yourself. Would you recommend paying quarterly taxes or waiting till the end of the year? Again, I recommend quarterly because it won't catch you short at the end of the year. I don't know why it looks so dark in here. Again, quarterlies are April 15th, I'm trying to think, April, July, October, January are your quarterlies. And again, I do it if you get, paid. It's easy just to turn around the next day and, pay a couple $100 to the IRS. I don't even wait for quarterly because I get sidetracked and forget. There's more complication to it as well. If you're single, you have to have enough itemized deductions to meet that $12,000 personal exemption threshold now. You can't just itemize anymore and pretty much get everything written off your taxes like you used to, since these tax law changes about 2 years ago now. Your personal exemption, meaning that your itemized deductions have to be more than $12,000 to be able to itemize. So even like your auto expenses, whether you take the mileage deduction or you take the use deduction, like for the tires and the oil change and that sort of a thing. Remember, unless you have a car that you 100% use for business, you can't deduct 100% of the business, the expenses associated with it. Because if you're driving 50% for work and 50% for personal, only 50% of those expenses. You can deduct inventory. It's a little bit more complicated than that, because inventory, you look at an overall first in, first out process on it. And they'll be looking to see like, what's your cost of goods sold on your inventory? Why are you keeping an inventory, especially in a business like this? It's not like a retail shop where you have to keep an inventory supply because people can order directly online. It can be done. I would be more hesitant to do it. I think it's better to put the products that you keep into like your marketing and advertising expenses as opposed to a straight inventory, because none of us really sell directly from our personal inventory. That's what the company as a whole does, not us as an individual. Can people pay their children under 18 and have that deducted from their taxes? Yes and no. They can. You would issue, your kids a 1099. Use caution though. I mean, when doing it, make sure you're not, I personally wouldn't, do that and issue 1099 statements to, my 5-year-old or my 8-year-old. Just be, even if it was something like stuffing envelopes, because depending on the volume that you do personally, you'll still have to file, if you issue a 1099 to your child so that you can write it off on your business, then it would still, depending on how much you end up paying them over the course of the year, can trigger a filing requirement for your child, which is an extra step for you. If you do have kids that you're going to do it for, I would personally make sure they're over, like a working age in most states, so like 13 or 14 years old. Again, I think more from an audit side and what the IRS is going to look at and trigger, an audit. You're issuing a 1099 to a 5-year-old that, for $5,000. Most auditors at the IRS will find that skeptical. Again, there's plenty of people that do it, and it doesn't, just because you do it doesn't mean you're going to get audited. However, the goal is to keep the audit at the absolute minimum that you can. No one wants that. Trust me, I used to work there at the IRS and nobody wants that hassle. I made a list, and I'm trying to think of anything else that I've missed. I know that's like super general and super generic for everybody. The only other thing that I can highly, highly recommend is research your tax preparer. Find someone who is licensed. There's a lot of people out there that are just bookkeepers that'll do your taxes for you, but find someone who is licensed, meaning a CPA or an enrolled agent. It'll say EA after their name if they're an enrolled agent. Make sure you understand what they're reporting on your tax return and that it jives, because ultimately, once you sign it or, agree to e-file it with them, you're ultimately responsible for that bill. I've seen tax preparers overinflate bills to get people big refunds. Somebody gets audited and they end up having to pay that money back in a lot of cases. A lot of people are also here I wouldn't say self-employed, but that you also own your own businesses on the side while doing, this. There's additional tax considerations as well. Once you factor in multiple businesses from multiple sources. So definitely find a qualified return preparer, especially someone who understands multi-level marketing businesses and gig businesses and the best way to get deductions for that, because it is starting to get especially now too, that more people are losing their jobs and going to be looking at this industry as an opportunity to make extra money when they have no money coming in. It's the risk of audit is higher, a lot higher than it used to be. They're starting to send out revenue officers for people that make out, you know, over $100,000 a year now. So just use caution on that and find somebody who is qualified. Just don't go with the cheapest person. So that's like a lot of information. I could still talk about this more. Does anybody have any other questions?
You guys can just unmute yourself and go ahead and ask her.
No H&R Block. Haha. No, I mean, H&R Block, I mean, some of the people are really good. They just use it as, you know, a way to get extra business. But a lot of them, you know, the people that work there are CPAs and enrolled agents. There's, you know, there's some people that, you know, specialize in multi-level marketing businesses that specialize in home businesses. And they're really, really good at what they do. Just find someone qualified. I see too many people find like whoever's the cheapest, or, you know, they get crazy situations and, you know, they don't know what their bookkeeper's doing and they wonder why they get letters from the IRS. So.
Yep. All right, guys, anybody else have any questions? Thank you so much, Cindy, for using your time this morning on Saturday morning to educate us a little bit. I know it's definitely, you can get into a lot of trouble if you do things wrong from experience. And she's right. You got to find a good preparer, because I didn't do anything wrong. I just signed a paper that someone else did something wrong, like big. And I got in a lot of trouble for it. So it's like she says, once you sign that paper, if you don't trust that person, don't use your uncle or your brother's third cousin because he's giving you a good deal. That's a good way to get your butt in trouble. And that's not what I did. I had like a reputable accountant in our area, and it's just, you can't fix stupid sometimes. So
yeah, I mean, I've seen people that are like, well, I hired this guy off of like Facebook because my friend recommended him. I'm like, did you ever see his Facebook page? Because it looks like he's shooting a music video on the hood of his Mercedes, not that he's doing taxes for you. She's like, well, I didn't think about that, really. But yeah, I mean, and that's the key thing. Like every single, like, you know what your numbers are. You guys know how much you make. You know what you spend on stuff. Like if there's nothing wrong with, because a good preparer will be able to explain every single item on your tax return to you line by line. That's what you're paying them for. If you don't understand what they give you back, well, I don't understand where this, you know, $50,000 number come from and this $10,000 this. And if you don't understand it, ask them. Where did this, like, how did you get this number? Because nothing I have seems to come up with like that money. Nothing wrong with that at all.
I have a quick question.
Sure.
So I've done my taxes before I got married, and when I was married, I do them on my own. Next year, someone else is going to do them. How do you go about finding somebody? Should you look for an accountant like now for next year to just start meeting with them regularly? Like, obviously.
Yeah, there are account, like you can start interviewing them now like you would for anything else. Like, what services, this is my business, this is what I do, what services do you provide? There are accountants and like firms out there, like local firms, you know, I mean, the H&R Block type places will do it too, but like local accountant firms, like small local businesses will be like, yeah, give us your, you know, statements and your QuickBooks statements every single month, and they'll just start running monthly like profit and loss for you guys every single month, so that come, you know, January, February, March, when you're getting ready to do your taxes next year, you've already given them everything. You don't have to give them a big old shoebox, you know, banker box full of papers and receipts, because you've been giving it to them every month. I mean, they do charge more for that service, but that's also good too. Like if you think you're going to have a lot going on, to cut something off at the pass and correct a problem before it becomes a huge problem. They can look at your stuff and say like, oh, you need to, you know, you have 2 kids, right? Three. So they can say like, oh, well, you have 3 kids and you're married now. Well, great. You know, you should bump up your estimated tax payments by like $200 a month, for example. They can catch that early as opposed to waiting and then you having to, well, great, I got to write a check for $3,000. If I had bumped it up by $200 a month throughout the year, you know, it wouldn't have been a problem. They can analyze your family situation and what you're bringing in from everything else and sort of work with you to structure a plan. Talk to, you know, other people in your area that might own small businesses, like, hey, who do you do your accounting with? Check the, you know, go back to basics, check the Better Business Bureau, check the Yelp reviews and, you know, the Google reviews in your, trust me, people will, you know, put those reviews out there, you know, they helped me out of this tax problem. Oh, they're, you know, horrible and they caused me to owe money, you know, but do your own, you know, research it like you would, like you look for a doctor or a, you know, dentist or something like that.
Okay. Thank you.
Any more questions, guys? All right, guys, thank you so much, Cindy. Thanks for showing up, guys. We'll see you later. Bye.
Bye.
Thank you.